Let's get to our calls of the day, starting with Trade Desk. The stock soaring on earnings, and BMO naming it a top pick today. Joe, you own this in the Joe T, your ETF. You added it last April, so I guess you're probably pretty happy with the performance.
Well, very happy about what we're witnessing today, and it's a reversal of a lot of negativity that we've experienced in this stock. Last April, when it was added at $64, there was very strong follow through into July. The stock got up to about $91. And then you had this November earnings debacle. The stock fell from 76 down to 61. There was significant concerns surrounding the video ad market, in particular with Amazon and Alphabet. The outlook for the company was not one that was a confident one. And the stock has significantly underperformed. So this was a make or break quarter, and they really stepped forward here and restored what they historically have given, which is the beat and raise. The confidence seems to come back once again. You see the response in the market, the analyst community applauding it. 25 buys, 7 holds, 3 sells, and the average 12-month price target was taken higher from 77 yesterday up to 92 today.
Yeah, it looks like BMO's price target 107. They say the ad tech company's earnings report should silence the bears. So we'll see. Good for you for adding that in April. Hopefully you've enjoyed a nice run from that. Well, what about Eli Lilly? I mean, could this be the first $1 trillion biopharma stock? That's what Morgan Stanley's saying. The bank boosting its price target for Lilly to $950 from $805. Joe, you own this one as well.
It trades like a biotech. So it's $741 billion is the market cap currently. It reported on February 6th. Strong quarter. The response to earnings has been nothing but positive. The stock has not corrected at all since that earnings report. And really right now, the catalyst for this stock is the momentum funds that are going in and buying it. And why is that so important? Because those momentum funds have a 5% weighting now to Eli Lilly. So that's a powerful force that's continuing to push this stock higher. But let's remember, it's being pushed higher now on that momentum, but the fundamentals are clearly in place from a company that really trades like a biotech.
Yeah, and Shannon, obviously, there's just been so much attention made on these GLP-1 drugs, and Eli Lilly, of course, a beneficiary, but so are many others. I mean, if you're looking to put some cash to work in this space, in healthcare, or maybe you could expand it out to biopharma, what would you suggest?
Well, I think it feels to me very much like the cholesterol drug franchises that we experienced, like with Lipitor and Pfizer and all of the other drugs that were put out at that time, and as well as the addressable market. I mean, it's a very large addressable market. I think the difference with Lilly, and I would speak to, some of the comments that Joe just made, is the pipeline. They've got Alzheimer's, they've got eczema, they've got ulcerative colitis. They have other really strong drugs in their pipeline. They're trading like a biotech, but they're also, from an incubation perspective, really thinking about their pipeline in a biotech type way. And so I think that if you're looking to get exposure to this, and then you're also looking for something outside of the obesity franchise, I think that's why you're also seeing, from a fundamental perspective, investors really interested in Lilly.
True. Obviously, a lot more there than just obesity. It's just grabbing a lot of the attention right now. Let's turn next to Palo Alto. 2 bullish calls on this one today, both Wells Fargo and Wedbush raising their price targets. Wedbush, Dan Ives, so the golden age of cybersecurity is at the doorstep, and Palo Alto is leading the way. Joe, you again. You got this one too.
But cybersecurity is mandatory. I mean, it's literally a necessity for the enterprise space. And what's positive for Palo Alto in that conversation is that they are in the areas of cybersecurity which are necessity driven. It's not as if it's cyclical spending that's going to come and go. The majority of the business model for Palo Alto is related to that necessary spending from the enterprise space. So cybersecurity is obviously a favorable theme from universally everyone in the marketplace right now. I have exposure through Palo Alto and through CrowdStrike. I did trim CrowdStrike. You have to acknowledge, again, these are 2 stocks in a marketplace that's technically overbought. These are 2 stocks that identify as being overbought as well. So that's something you have to keep in mind going into the report.
Yeah, exactly. The report is on Tuesday, February 20th. And of course, the market closed on Monday. Bill, what do you make in this space, Palo Alto or cybersecurity in general?
I had a little bit of a misread on it. So from the idea of, there's only a finite amount of capital when you build out a portfolio. I really leaned into some other sides of tech, and I did not ride this cybersecurity. One of my fears is as the hyperscalers, the larger, big mega cap stocks like a Microsoft and Alphabet and Apple, what other places are they going to start eating people's lunch? And I was fearing that Microsoft is going to really get a foothold in the cybersecurity space, and I still think that's very possible. Palo Alto and CrowdStrike have performed very, very well, and I didn't doubt that they could, but overall it was something I would kind of stay out of. But we own Leidos Technologies, defensive tech company.
Oh, that's right.
And just to place it into context, the price of Palo Alto is 30% above its 200-day moving average. That is beyond extreme.
Yeah, that's a big one.